Hey there, everybody. Hope you're all doing well today. My name is Tricia, and I'm actually with Easy E-mini Trade, but today I am presenting for Maria Russo's, and she's the developer of Trade Order Flow. And when I found her product, her tools for trading order flow, I was hooked, definitely hooked. So I told her I would be honored to do her webinar for her and show you the product, how it works, and how I'm using it. And I hope that you find it really helpful. So order flow, the term is out there, it's floating around, you get many different explanations, opinions, etc. So here's my interpretation. Anticipating the price levels where there's a higher volume traded, and to trade those areas where price is likely to hold and reverse or break out of these areas. And being able to see the order flow coming into these price areas and levels, it gives us a sneak peek, a behind-the-scenes look, if you will. And so if we're coming up to a resistance area and we see that buy orders are slowing down, or that we're coming down to support and we see that sell orders are slowing down, this is a good indication that price will reverse. But how do we know that without order flow? So knowing where the levels are is another key factor in obviously trading with order flow or any other type of trading that you're doing, any setups that you're doing. Lots of ways to come up with these price levels. You can look at how price is behaving when you look to the left on your chart, areas that's creating support, areas that are creating resistance above you just based on the price action. You can use floor trader pivots. You can use Fibonacci retracement areas, confluence areas, previous days open, high, low, close. There are many, many ways of finding those levels, and everybody has their own opinion and their own methodology, if you will, but still the key is always in those support and resistance areas, how do you know whether they're going to hold and reverse or are they going to break out? So wouldn't it be wonderful if we had a way to do that? And we do. We have a way to do that with the order flow, and I'm going to show you further in the presentation how that works and how you can use the value areas. So the reliable way, a reliable way, not the reliable way, to define these areas is to use volume value areas of a developing market profile as well as the value areas of the previous day. So a market profile, I mean, you could do a whole webinar on just market profile. You can do courses that last weeks on market profile. There are books, courses, etc. The scope of this webinar, we're just going to give you a brief synopsis of it, and you can investigate it further on your own. But basically, it's a vertical graphic that displays price and time, and this will allow you in one glance to see the price levels that have the most concentrated volume throughout the day, the week. You can look back as far as you want. So one of the market profile developers was Peter Stadelmeier, and you can go to the CME site and download his book at no charge. Or this link that I have here, you're not going to be able to click on it, but if you want to jot it down, or you can just do a search on the CME site. That's a tutorial on market profile. And the other option is this book that's listed below, Mind Over Markets by James Dalton, another good book to read if you want more information on market profile. Also, I forgot to mention that Maria is here. So she'll take your questions via the keyboard. So if you wanted to type a question, she can see it and she can answer via the keyboard. Forgot to mention that, you guys. So this is a market profile. This is kind of scrunched up, but you can see it. So right here, this is without today. So this is the week leading up to today. This is yesterday. This is the day before. And at a glance, you can see the higher concentration of volume, the wider it is here. So the wide areas here, you have more volume than you do, for example, here or any of these areas here. So this is looking at the week at a glance right here. If I stretch it out, you'll see and you might not be able to see, but each one of these little areas here are represented by a letter. And the way that it's set up in the package that I'm using from Maria is each letter represents a half hour, and you can customize that any way that you like, and it will mark the value areas and the value area highs and lows. And there are all sorts of patterns that you can look at using the market profile. Again, I urge you to read the market profile book, and you can get more information on it. Really interesting stuff. Some of it can take a little bit of to get through and not fall asleep. But anyway, still really interesting stuff. But you can see the value here. Looking at it, you can get at a glance what happened this whole entire week, this whole entire day. So it's helpful, but not by itself. So the value area is the area that 70% of the trades took place. So this is the area that's determined to be the fair value area. And so when you have prices trading above the fair value area, they're considered to be above value, and prices below the fair value area are considered to be below value. And the thing about knowing where the value area is that price is going to continue to find its way back to that fair value area. And right smack dab in the fair value area, you have the point of control, POC. And you'll find that when price trades to the high area, the high value area, it's going to find its way back to the POC. If it trades to the low value area, it's going to find its way to the POC. Unless we have a really strong trending day, and I've got examples of all this, then a lot of times you'll see that you'll just be retracing back to the upper area of the fair value or the lower area of the fair value. So here is my value chart, and all these are included in the tools that Maria will be offering you guys later. And there's actually more options available on these charts that I just don't use. There's just so much information. But it will plot the previous day's value areas, value area highs, lows, and point of control. So what you're looking at here, the shaded area, this is the value area. The yellow is the fair value area. This is the first value area high. This brownish line that you see here is the second value area high. And then below we've got the fair value area low here, and then the second fair value area low here. So this area in yellow is usually the area that a lot of traders who trade using value areas will stay away from because it's considered fair value and it can tend to get stuck in there. The purple line here is the point of control, and oftentimes price is continually finding its way back to that. I don't have a problem trading in this yellow area. A lot of times I'll watch price come up to the point of control, and as long as order flow confirms it, I can short off of that, because obviously we don't really know, is it going to hold here, or is it going to find its way back up to the upper area of the fair value, or is it going to roll over and hold the lower area. But this is the fair value area using the market profile. And over here we've got volume. You can see it over here on the right. And so anytime that you have a high concentration of volume, price is typically going to hold up there. And if you take an entry, let's say, just under an area where you have a lot of volume, it will likely trade down to the next area where you have high volume. And this blue line is the previous day's value area. I think I mentioned that. So here's another value chart. And I wanted to show you the difference between this one here where we're not really trending and this one here where we're trending. This is actually today on the Russell. So notice the difference. When we have more of a trending day, you can see that we're hanging out in the top part of the fair value area, continually hitting the point of control here. Pulls back, and this is early this morning, but pulls back to the point of control, moves higher. Pulls back to the fair value area, moves higher. Point of control, moves higher. Then as price is getting stronger, you can see when it's pulling back to the upper area of the fair value here. Pulls back, pulls back, pulls back. And then when it finally breaks, then it holds actually yesterday's value area, this blue line. So this is a value area from yesterday. The yellow is fair value for today. The red is a value area from yesterday, so is the blue. And then this fuchsia dots right here, this is the point of control from yesterday. So you can see how price hangs out in all those areas. And so this is the order flow chart. And so this allows us to see inside what's going on real time. And there are lots of options for displaying the order flow on your chart. You can have it bid times ask. You can show it many different ways. We actually have the pivot highs. I like to call them swing highs and lows. It'll mark those. That's what these blue lines are. The red are the swing lows. And you can put part of the indicators are the Fibonacci retracement areas. You can have it mark support and resistance areas for you using the ABC formation. There are lots of options, and I'm not using all of them. There's just so many amazing components to it, but to each his own. So this is marking the value area right here. This is a value area high. Now, the thing about this chart here is it doesn't start to populate information until you turn on your computer. So if you refresh your computer or you do anything to your order flow chart, you lose all of the information within these bars. And so on the right, I've got the buyers. On the left, I've got the sellers. And the way that we look at this is we're always looking at it on a diagonal. So just taking this bar here, you can see the three sellers here to the one buyer. So it's always on a diagonal, 69 to 35, 48 to 16. So it's always on a diagonal, just like your dome. There's always that difference in price by a tick, and you're always looking at it on that diagonal. And so for me, just looking at this isn't enough information. Now, obviously, with the value area being marked on here, I can see coming up to that, I could just go ahead and short. But by itself, the order flow isn't enough for me. But a lot of talented traders out there can just watch order flow and tape read and do amazing things. I'm not one of them. Down here we've got the delta, and you can customize how many of these categories that you want to see on your screen. I just want the delta. You can put the bid and the ask on there. You can do lots of options down there, but I just want the delta. And the delta will tell you the difference between the buy orders and the sell orders. So for example, when you see minus 63 here, you have 63 more sell orders on this bar here than you do buy orders. Now I have this set up on an 8-tick range chart. That's just my preference. You can use a 5-minute chart. You can use a 15-minute chart. You can use whatever you like. But this flows well for me. I have an easy time seeing it, so I like to use an 8-tick range chart. So the use of the value areas from a market profile and order flow are a very effective trading combination, in my opinion, because when we first started the presentation, we talked about finding levels, price levels, where price was either going to hold and reverse or break out. So the market profile tells us where these value areas are, and the order flow tells us who's in control at that time when you're coming to those price levels, the buyers or the sellers. So this is going to help us to determine whether price is going to hold or break through those areas. And so now we're going to start with lots of examples. It makes a lot more sense. And keep in mind, obviously, we're looking at these in a slide presentation. If we have time, I can show you my charts real time so you can see how the order flow forms. But on the left, and this is CL, this is crude this morning early. And so on the left, I've got my value chart. On the right, I've got my order flow chart. And let's see, Maria, you taking these questions, I hope? Kevin wants to know, does the software automatically highlight imbalances? Yes, it does. When you have like a high value, high volume area on your order flow, it will, and this isn't showing up as dark as I'd like it to, but if you have a high concentrated number of buyers, it will color dark green. So the higher concentration, the darker the green is on the buyer side or the red is on the seller side. Also here on the left we've got volume at price levels, and the more volume you have in those specific price areas, the darker that will become as well. So over here on the left I've got crude, I've got fair value area here in yellow, and this is early, and you can see from when I first turned on my computer, it was right here at 6:15 this morning, so that's when everything started to form right here. This is the divergent delta, delta divergence. This is an indicator that's included in the package. I don't really use it because I've got the order flow. I find more use with the order flow. So what we're looking for is we're looking for price to trade outside the fair value area, and you can look for a breakout of the fair value area with order flow confirming, or you can look for price here broke out of the fair value area. You can look for a retracement back to the fair value area by the bounce, and if you don't see that the buyers are stepping in to buy the bounce off of that, then you can short it and look for a retest of the previous day's value area, which is this blue line right here. Now, like I said, a lot of people won't take any trades in the yellow area, but a lot of times when we have a wide range for the day, our value area gets very large. And Maria's got some great dynamic tools that will plot about every 50 bars, and I'll show you a little bit more on those later. So they're forming quite often, which is, you know, a way to allow you to trade into the yellow area. So anyway, here coming back into this fair value area. So what's going through my head is, okay, I can either buy off of that or I can short off of that. And so I'm looking at the order flow here. This is the bar that's forming here at the time when we're breaking through into this value area. So I'm looking to see, okay, what are we going to have more of, buyers or sellers? So there are a couple ways. The delta is really helpful, but this is continually changing the number based on the orders coming in. So sometimes this isn't as easy to read at the time, because let's say I want to take a short and this is negative delta, and then all of a sudden we get a lot of buyers step up, then this can then quickly change. The easier way, or another way, is to just watch the flow of the orders coming in here. So you can see I've got buyers on the right, sellers on the left, and as the bar is forming here, and I'm saying a bar because I have it as an 8-tick range chart. Basically we're just mostly interested in the price levels. So right here where I have this arrow drawn, this is right where this is breaking into the fair value area. So you can see, looking on the left, we have a lot more sellers coming in, and as this is forming real time, this will be constantly flowing and moving. So here you can see on the right side, we don't have really any buyers stepping up here. So in my opinion, safe to go ahead and short, because you can see up here, we have some buyers up here, but definitely the sell orders are taking over. So you can go ahead and short and expect or hope that it will find its way back down to the value area from yesterday. And so it basically gets there. You're not looking for a lot, and then if you're fortunate enough to get a breakthrough of this area, then you can do the same thing. Take a breakdown with the seller stepping in, breaking this value area from yesterday, and then the hope would be, if you break through that, that you're looking to hit the point of control from yesterday, for today, which is this purple line right here. So when it holds, you have an option. You can go ahead and buy off the value area from yesterday, or if you want to stay away from the value area, the yellow, you don't want to take any trades in the yellow area, you can wait to see if price breaks through the upper value area here into the blue, and then take it expecting it to retrace back up to the previous high here. So you have two options: buy it down here, and you can always use a small stop. So if you wanted to buy it down here and it doesn't go, you can just use, a few ticks below this area where you have the blue dots here, or whatever your usual stop is. That's for you to decide. But in using actual price levels with the order flow, you can use a really tight stop. I've not, to be honest, mastered a 2 or 3 tick stop. Maria is amazing to watch her trade. She can take a trade with a 3 tick stop. I don't know how she does it. I have not been able to do that very well, so I still will typically start with a bigger stop. So anyway, breaking out here, this is the bar that's forming over here on the order flow at that time. So you can see here, comparing the buyers to the sellers, we have no sellers over here. They're all zeros. So that's a good indication, hey, let's go ahead and buy that. And you can just place your buy stop right in that area, and then it triggers, and then away you go. Then it doesn't actually retrace back up to that previous high here. You can see it. It doesn't actually make it there, but it works out for a few ticks nonetheless. Probably about 8 or 10 ticks you got out of that one. So then when it retraces back down into the fair value area, not too keen on doing much of anything, but if you chose to, you could short once it broke back into the fair value area right here and you saw the seller stepping up, or you can wait to see if it retests the value area from yesterday and then see if you see the buyer stepping up and buy it. So you have lots of options in there. Mostly when you look over here to the to your left here, basically we're just chopping sideways, but you can still take all of those trades off of those areas. Sell at this resistance area, buy at the support. Sell at resistance, buy at support. Then if it breaks through here, then you can go ahead and sell it through support. So here you can see where I was talking about when it comes back into this fair value area, you have the choice. You can go ahead and sell it and hope to get back down to the blue dots, or you can let it go and see if it can pop back through into the blue area and buy it with the hope of retesting your high here. Now here it failed to retest back up to that high, but that doesn't mean it can't get up there with the buyer stepping up. So here where you've got price coming back into the fair value area, it's right here on this bar. And so you're thinking, okay, well, I'll short it once it breaks that. But when you look at this bar that's forming, we don't really have a whole lot of sellers coming in. We have mainly buyers up here. As the bar is forming, we do get some sellers, and then as we start on the next bar, we get some sellers. But if you look at the delta at the time when this is breaking, it's pretty positive. It's 156 compared, to 47 and 48. So a high number of buyers on this breakthrough here. So not likely that you're going to want to short once it comes back through here unless you see lots of sellers stepping up. And we really never do. We're pretty neck and neck when you look at the two bars that are forming. And keep in mind, these are flowing at the time, as I mentioned. So when you're looking at them here just on a still shot, it's a little harder to comprehend that you're watching these numbers increase in size. So if you see the buyers' numbers increasing in size all while the sellers aren't, then you know, hey, I'm not going to short down there. But if you see an increase in the sellers coming in, then you can go ahead and say, okay, I'm going to short. And in looking at the order flow, it's very easy to do. Now, like over here you can see, for example, as we're coming up to this resistance area here, you can see that we get a lot more sell orders come in. Can you see that? On the right we've got the buyers, on the left we have the sellers, so we get a whole lot more sellers coming in. So you probably wouldn't be thinking that you're going to take a breakout there unless you saw more buyers coming in. But because you see the sellers coming in, you're up at the upper area of the value upper value area here, so you could go ahead and short that if you see more sellers coming in. And we're not looking at waiting for a bar to close when you're looking at the order flow. Like I said, you're looking at the price levels where you're getting the trades. And so here we do finally break out. So now you can see we're exiting the top part of the value area here. We just took out the high to the left. Here is the bar that's forming at that time. Right where I've got the arrow is the price level here of this breakout right there. And you can see, looking at this, what do you have? More buyers or sellers coming in. You've got more buyers. So you can go ahead and buy it. And then the hope would be that you could get up to the value area from the previous day, which is up here at this 8102 area. So that would be your hope, that you can find your way up there. So let's say that you didn't take this breakout here. You get another opportunity when it retraces back to this upper part of the value area, and that is right here. And so when you look at this, you're thinking, okay, well, how do I know it's not going to roll over and retrace, all the way back down here to the yellow area? You look at your order flow. So looking at your order flow, you can see leading into that, we've got a lot more buyers here, more buyers here. This is where we're retracing back to here. This is the area right here where I've got this arrow, and we have more buyers. It's all more buyers. Now, the thing to remember is that you can also use the order flow to manage your trade. Let's say that you were long and you see more sellers stepping in. So that's a good indication to go ahead and tighten your stop or take some profits off, and vice versa, obviously, for shorts. But that's a decent way to have a heads up on, hey, this move is slowing down here, I better take some profits off, or I'm going to move my stop up. And so let's say you weren't convinced that you're going to take this pullback here. Well, you get another one right here. You get another opportunity here when it pulls back right there. Now this one, might not be as desirable, because if you take this pullback here, now you've got limited space up to the value area from the day before. We know that it held here, so we really don't know what it's going to do here. So you might want to wait until it breaks through this value area from yesterday. And you can take the actual breakout as it's breaking out, as long as you've got the buyers stepping up there. And how are we going to know that? Through order flow. So in looking at this chart here, you can see all the retracements. You get a retracement here, here, here. Then we don't really get one until up here. And I'm sure you all have ways that you could still take a pullback entry, but using the value chart with the order flow, you really don't have a pullback opportunity here. You could take a breakout once it consolidates, lots of different ways that you can take a trade when it's moving higher. But looking at the charts that I've got here, you either got in on any one of these areas here and trailed your stop and rode it all the way up to the point of control from yesterday. That's what this fuchsia line is here. So when you get up here to this fuchsia line, this is an area where we're expecting to hold. Now, as scary as it might be, once you get up there, you could go ahead and short, as long as you saw on your order flow that you had more sellers stepping in than buyers. One thing I've noticed with the order flow is, as you're approaching a strong area of support or resistance, a lot of times what you'll see before you ever get up to your, here in this case, resistance, before you ever get up there, you see a large number of buyers coming in before you ever get there. And then as they get closer to that area, they wane, they get very thin, and then you'll get the sellers step up, and then sometimes the buyers, and then the sellers, where you wind up consolidating there. And then once you see either more buyers step up through this area, you can buy it, or once you see more sellers stepping up, off this resistance area, then you can sell it. Now the hope would be that you could retrace all the way down to the value area. It doesn't obviously make it, but here it retests that point of control from yesterday. So great spot to take a short. You already know it held back here, so when your order flow confirms, you can go ahead and take a short from there. Once it retraces back down into the value area here, we don't know, is it going to bounce off of that or is it going to trade through it, our order flow. So I'm going to show you the order flow in all these areas here. Now obviously here we're consolidating sideways here, and you can still trade that. Buy at support, sell at resistance, buy at support, sell at resistance, buy at support, just over and over again. So here, let's take the first test of that area here as it's coming in. Now here, like I said, as long as you've got the sellers stepping in as you're breaking this area here, which obviously we did. I don't know why I don't have a slide on that. I thought I did a slide on that. But you could go ahead and take that as a short, expecting it to trade to that fair value area. Remember, price is typically going to migrate back to that, to the yellow area, the blue area, and then the yellow area. So here, as it trades to the fair value area here in yellow, right here is the area that it's setting up here. You can see it right here. So coming down into that, you can see we don't have any buyers, we have all sellers, but we haven't hit the support area yet. We don't hit the support area until this bar right here. And as this is forming, what happens is it starts out here and goes lower, and then we get the buyers step up, and the buyers and the buyers and the buyers. So after this is complete, you could go ahead and buy it. Once you see that the buyers are stepping up over here, you could buy expecting it to bounce back up to that resistance area, which is right there. Once it gets there, if it breaks out, we can buy it. If it holds, we can sell it. So here is our order flow trading up into that area. You can see we've got our delta, more buyers, and then here you can see the buyers are waning here, and that's right as we're hitting that. Obviously real time you don't know that until after the bar is complete, but if you're looking at the order flow here as it's forming, you'll see that once we trade higher, we wind up with more sellers stepping in. Sellers, sellers, sellers. So then you can go ahead and short off of that area, again using the lower area here as your target. And you can just continually do that back and forth, back and forth. And others may decide to stand aside on something like this. But you know, this is, it looks like it's a small range, but you're actually looking at like a 40 tick range here. Actually more like 30. It looks like 32 tick range. So that's tradable, I'd say. And so here you go again, buy off support. Now here's the thing here. You don't know, like here you see this bar breaking here, and you're looking at your order flow, and this is the bar that's breaking right here, is this bar right here, the one on the left right here. And so you can see that you've got more sell orders coming in, so you go ahead and you short it, and you could get a little something out of it. You know, you probably got maybe 8 ticks out of it, but once it changed direction and you see that now you've got all these buy orders coming in, you can go ahead and do like Maria does, crazy woman that she is. She'll just hit reverse. I don't do that. A lot of people can do that, but I don't hit reverse. I should say yet anyway. Getting definitely more brazen with having order flow, I have to say. Definitely more aggressive. But when you see that it's not going down, even though order flow was saying, hey, take that short, then you just go ahead and reverse, or you just take a small stop out. Now, like I said, a lot of people won't trade in this yellow area, so that, again, is going to be a preference. Then you get bounce off this fair value area again, and you can see right here on the next bar, you know, the buyers step up, so you could go ahead and buy it. So you can do that back and forth, back and forth. So now we're back in the fair value area. So because you just got burned back here, let's say, you're thinking, okay, I'm not going to try a breakdown there. But let's just look at it, looking at the order flow. You can see here, even if you just look at the delta here, you can see that we don't have really very many buyers stepping up back here in the past, looking at our past bars. Looking at the bars as they're forming here, as we're breaking this area, you can see that we definitely have a higher concentration of sellers. We have no buyers. Keep in mind, as this is forming, this is moving lower and lower, and it's kind of, you know, ping-ponging back and forth. And then you have more sellers, more sellers. So once you break that area, that you have more sellers, you can go ahead and take it. But let's say that, like I said, you took it back here and you got burned. You're not convinced that it's going to go lower there. Well, once it retests up here and holds, then that would be a perfect place to take a short. It comes up. It already had been holding back and forth here. It broke. Now it retested. So once you see that you've got more sellers stepping up there, again, great place to take a short. Right there. So here's the bar as we're hitting our top side of our fair value area here. And you can see leading up into this move higher, we've got buyers. And then over here you can see we've got more buyers. Not a whole lot of sellers here on the left. They're all zeros. And then as we're hitting that area here, so the buyers push it up, and then as it's pulling back off of this value area here, you can see it's mostly sell orders. As you're watching this real time, you'll be seeing that, hey, you know, we've got hardly any buyers compared to our sellers. So you can go ahead and short it. And then the next bar, sellers, sellers, sellers. And you're pleasantly surprised when it actually retraces back down to the value area from the previous day. So this would be a spot where you could buy it off the value area from yesterday. Trades back down, you can buy it. Trades back down, you can buy it. And as long as you have the buyers stepping up there, you buy off of that area. If you have more sellers stepping up, then you sell it. And if you tried to short it, because let's just say that you had some high number of sellers coming in here, it doesn't break through here, but chances are your stop held, depending on how big of a stop. If you use a 3 or 4 tick stop, you got stopped out. But once it broke down here, you could have still been in that trade, or you could just get in the trade again. So you could either buy it and it doesn't go anywhere and then you short it, or if it was breaking down right as it was coming through, as long as you had more sellers coming in, you're going to sell it. And then the hope would be that you find the fair value, the point of control. Now, I don't mind taking trades, like I said, off the point of control. A lot of people won't mess with it, but like here as it's breaking through, or here bouncing off, if you're taking a bounce off the point of control, where is it likely going to trade back up to? The area from yesterday. So this, what I'm looking at here, these are the MR tools, and these are more dynamic, and this goes hand in hand with the order flow stuff. So you'll see that these red, blue, and green lines, red, blue, green, and right here is the market structure, basically telling us the areas where we've got a high concentration of volume. So this is the profile, and you can put as many of these on your chart as you want, and you can look back further than, I'm looking back 50, I think, but you can look back 100, you can look back as many as you want. But where we've got the high concentration of volume, you'll see that we've got these red, heavier, denser lines. So when you see that on your chart, that's usually an area that you're going to get stuck in, and the price isn't really going to be very easily moved. So that would be an area where you might decide to stay away from. And so basically these are your value areas, but they're forming a lot quicker. Instead of using this one here that's so vast in size, a lot goes on within this yellow area, this fair value area. So that's a way that you could trade them. trade in this value area. So what you're looking for is the same thing, a break of the high value area. You're looking to take a buy as long as the order flow confirms it. This would be the point of control right here in blue, and then the green would be the low value area. So here you're looking to take a short off of that. Some people will trade within the boxes in a sideways range, and again, that would be a preference. So here would be a good example, just trading back and forth between the boxes with order flow confirming. So at support, you'd be looking for the buyers to step up. At resistance, you're looking for the sellers. I don't trade it like that. I like the breakout of the red or the breakdown of the green. So here, for example, when we've got this green area here with our high value areas and low value areas just starting to form, the longer that they're forming, the more reliable they are. So let's say that we were to get a break of the red line up here. Now this one, it wasn't here at the time when these bars were forming, but let's say that we were to get a break of the red value area right here. You can see to our left that that's not where a high concentration of our volume is. And so that would be a place that we could take a buy with order flow confirming. And what we would look for is we would look for price to trade back up to the upper area of the profile. What you'll notice in any market profile is that prices continually, let me just find one where maybe we can, no. I was hoping to have a better slide, but what you're going to find is prices continually cycling in these value areas. Granted, on a strong trending day, you're likely going to stay, like we said, outside the top part of the value area and just take the pullbacks. But when you have a day that's not a strong trending day, you're going to find that it's going to continually trade back and forth in this area from the top to the bottom to the top to the bottom. Now, especially with the order flow in a more dynamic form here, let's say that price were to trade lower, it's likely going to come to the bottom of the profile here and hold. So it's usually going to always stay within the market profile area. And anytime you have an area of high volume and you take a trade, like I said, you're going to get stuck there. But if you can take a trade outside that high volume area, the likelihood is that it's easily going to be able to move back up to the upper part of the profile because we don't have nearly as much volume here. And the tool here in the middle, this will tell you whether the market is in balance or out of balance. So if the market is balanced, basically you're looking at chop. We're always looking for a market to be imbalanced because then that means usually one side or the other, it's going to be moving in one direction or the other. And so that will help you with that. The yellow dots tell you that it's a balanced market, and the blue dots tell you that it's an imbalanced market. So that's really helpful. And there are other tools that come with it. You have the balance, imbalance, floating PCL, and static PCLs. So basically mark support and resistance areas based on price. I don't like the floating, I like the static. And then the high value areas and low value areas, that's these boxes here that are continually forming. And then the scale, this basically, to me, I mean, it looks like a stochastic to me. I've put it on my chart with a stochastic and it's very similar. And then the market structure right here. So I'm just going to briefly, I'll tell you what's in the package, and then Maria can answer questions and I can answer questions. So with Maria's order flow package, you get the divergence delta, the market profile plus, the order flow chart, price action, and the VWAP market profile. And so that's basically everything you see here on this chart. And each one of these tools on these charts have many different options. Like I said, you can put the fib lines on there that will automatically form. There's just so many options, so many options. And again, up to the individual what they want to see or not see. So you get all that, and the biggie is you'll have 6 months real-time training in Maria's training room. And that might not seem like a big deal, but I can tell you it's taken a lot of practice to get really comfortable with the order flow. You know, I've always, over the years, wanted to learn how to do it, but I never found the right tools. And in my search, and you guys have probably found the same thing, there are a lot of amazing tools out there, but a lot of them are really expensive. And not only that, some of them you don't even own the tools, you are leasing them. So I was really grateful when I found these and was able to have somebody actually show me how to use them. And Maria, if you go in her room, and she will allow you to come in on Wednesdays and Thursdays by invitation. So send her an email if you like. We'll follow up with an email tomorrow and we'll give you the information. But to see her trade real time, it's like, you know, I wish I could do that. But you can. Once you learn how to use these tools, you can do it. And the MR tools that I just showed you on this black chart right here, she's willing to give you those. And if you were to purchase those, they're thousands of dollars, I can tell you. So what she's willing to do is she's willing to give you $300 off the order flow package, or give you all of the MR tools at no cost, and that's, like I said, worth thousands of dollars. And the order flow tools are $29.95, and you can either take $300 off or get the MR tools that you see on this chart here. And you know, you have to ask yourself this: if you're struggling with your trading, trying to take it to the next level, you know, what's the real cost of not acting on this? I can't tell you. I've been trading since 1999, and I run my own room. I have my own setups that I like, and you know, this has taken me definitely to the next level to allow me to be more aggressive. For the first time ever, I've been trading the NQ pre-market. I would never have thought to trade the NQ pre-market, and the reason I'm willing is because I've got the order flow. I can see what's going on behind the scenes. And what I want to do real quick is I'm just going to, I know that you can see my screen, I really don't care. I'm just going to show you what these look like. Of course, you know, it's 5:18, so nothing's going to really be going on. But, you know, as your orders are coming in, this bar is continually forming. And hopefully you can see that now. So as these orders are coming in, this bar will be forming. And over here on the right side, you can see that you've got a high concentration of volume. So this is also plotting here. I can look at these any way that I want. I can look at these bars as bid times ask. I can look at them as a bid-ask ladder. That's my preference. I can look at it as a bid-ask histogram. So if you're more of a visual person and you can see, you do better seeing the high concentrated levels on, you know, based on color, then, you know, that's for you. You can look at it just as a delta, graduated volume. The more volume there is, the darker blue that that would be. Many options. You can use just volume. The other option is you can have that formation 1, 2, 3 show up if you like. Like I said, that's not a setup or a pattern that I trade, but if you wanted to, it's there. I can change these columns down here, and it's all pretty easy. Like all you have to do is just click on the show here, and you can add, take away, do whatever you want. You can show unfinished business. Typically when you're looking at your order flow chart, you're going to end with a 0 up here or a 0 down here. And if you see that there isn't a 0 there, that's considered unfinished business, and usually price will find its way back there again. So let's take some questions. I know Maria's been answering your questions, and I hope I didn't forget to mention anything. So does anybody have any questions? And like I said, I know Maria's been answering them. And Maria, if you want the mic, you're welcome to take the mic if I didn't cover something that you would like me to have covered. Yeah, unfortunately, with the time of day, it's 5:21 in the afternoon, we're not going to get anything really moving here. But we can look back at anything that you want. And I'll just stretch that out a little bit so you can see. This is what I was talking about when you have a high volume area here. And you can see it pretty easily. Here we don't have a whole lot of volume. Here we've got more concentrated volume. So in this price, and there are areas. It's not one specific price. It's usually going to encompass a few different price levels. So if you get a break of this level here, the expectation would be that we should be able to move down to the next high concentrated area. I have found that a huge help actually in knowing where those levels are. And you can, like I said, you can see it over here on the chart on the right as well. And I have it over here. And you have the option, you can put that on the left-hand side if you want. And over here you can decide to see as much of this as you want or not look at it at all. I like having it there. And so you can see that price was not able to break through that high concentration of volume there. It actually pushed higher through that area. Then you can look at that throughout the day as it's as price is forming. All right, come on, questions, you guys. I know Maria's been answering them, but if there's anything else or something that you want to go back and look at. So make sure, a couple things. Make sure you come into Maria's room and see her tools. On Wednesdays or Thursdays by invitation, or by request I should say, and then she'll send you the invitation. And it does get filled up. So if you wanted to see how Maria trades, make sure you send a request so you don't wind up on a waiting list waiting to get in, because sometimes it is standing room only. And she's, like I said, she's very aggressive trader, but you can use these order flow tools to trade whatever setup you're using. Let's say that you're somebody, I have a setup that I like to trade. It's called a continuation setup. Basically I'm looking for price to close outside the counter channel and continue higher with a couple other components to it, but in a nutshell, that's what I'm looking for. And so this has helped a lot, because as I'm breaking out of the counter channel, I can see that I've got, if I'm breaking out to the top side, I can see I have a lot of buyers stepping in. As I'm breaking out to the downside, I can see I have a lot of sellers stepping in. And if I don't see it, then I can pass on the trade, where before I would just take the trade and, it felt like now it feels like it was, like they say, poke and hope. Take it and hope that it works out. Down to the next area of support or up to the next area of resistance. And like I said, this is the charts that I have them on. I like it on an 8-tick range chart because I can see the bars. I like to see the bars. It doesn't really matter what you put on your screen. You can use, Maria likes a 5-minute chart. So it's just your preference, because mainly we're interested in the price levels. We're not as interested so much in the bars per se. But I just have a much easier time grasping the concept looking at the bars. So I can't believe you guys, I know Maria has answered some questions, but I can't believe nobody has any questions. I don't know what that beeping is that keeps happening. So we got 5 minutes left. I think this runs an hour, right, Kevin? So we definitely covered everything. I can't think of anything that I wanted to tell you that I didn't get out. If anybody wants to look back at any chart, I'd be happy to look. And you can use these on any instruments. It works on anything. And I found it really helpful, like I said, pre-market, because the volume is so much lighter pre-market. Sometimes it can be a little scary, especially crude. If you're somebody who trades crude during the day, pre-market it's a totally different instrument, the way it behaves. I really like it early in the morning because it has presented some nice movements without being really herky-jerky or really crazy. So that's been really helpful. So some of the ways that it's helped me is, like I said, to be more aggressive and almost feel like, Maria uses the term a crystal ball, but sometimes it feels like a crystal ball. And I'm not going to say that, you are going to learn this in 5 minutes. It takes practice. What's helped me is chart replay. Now, the other thing is I don't use Ninja, but these tools are for Ninja. So what I do is, I trade off my regular account where I've got my, with my current broker, but I run Ninja in the background with my Sierra charts running, and I just keep using the free demo. I just keep renewing it every 21 days. And so if you don't have Ninja, it's not a reason not to get it. Definitely. And so, I have no trouble running both at the same time. But you can just run the Ninja charts and trade from your, from your dome on whatever platform you're using. And, if you've done any investigating out there, you know what tools are out there. You've probably tried them all. Most of us all make the same rounds, it seems. It's funny to see the same people in, different places. You run into the same people, which is really interesting, I find. So we're all looking for something that's going to take us to that next level. And I really feel like I found it. I really feel like I found it with the order flow stuff. And, those of you who know me know that I don't ever push anybody else's product. So that says a lot for Maria's tools here. All right. Well, if no one has any questions, I just guess I did such a fabulous job that I made everything so crystal clear, right? All right, then.